Good evening, traders. We hope that you've all had a great weekend and are ready for this webinar this evening and ready for the week ahead. The week ahead's got some nice opportunities rising. I hope you've all done your analysis and are ready. This webinar is a student-only webinar where we'll be constructing full top-down analysis using our top-down analysis checklist, going over USD Swiss franc and Euro Canadian dollar. We advise that you have a top-down analysis checklist in front of you to go through each time frame and each pair as we do. Before we start, we'd like to remind you of the economic news for the week ahead, as tomorrow is a quiet day with no releases. Tuesday, we only have one news announcement, which is for the US dollar. Wednesday the 12th, however, is a busy day, which includes a speech from the US Fed Chair Yellen, release from the Canadian Monetary Policy. The Bank of Canada will also release their interest rate decision, and later in the evening we also have the Bank of Canada Gov Pollers speaking. On Thursday, it's not such a busy day, however we do have two releases for the US dollar, which includes a speech from the Fed Chair Yellen again. So the Fed Chair Yellen is speaking on Wednesday the 12th and Thursday the 13th. On Friday the 14th of July we have three releases. All three releases are for the US dollar, which include the core CPI, the core retail sales, and the retail sales release. Please always remember to check the economic news calendar before setting any market entry orders. We will now begin to go over our top-down analysis within USD Swiss franc. However, we remind you that we are unable to see the YouTube chat, so please do not ask any questions within the YouTube chat. Please ask them within the webinar jam chat, and I will stop for a few minutes after each time frame of each pair to allow any questions to be asked. Okay, so they are our notifications for this week and for the week ahead. And in front of us now, you should be able to see that we've got the USD Swiss franc chart. 1 second, guys, just want to double check something. Okay, great. So in front of us, we have the USD Swiss franc chart. And as you can see up here in the top left-hand corner, we're on the monthly time frame. So we're going to go through our top-down analysis checklist, check by check, going through each stage of the analysis. So the first thing that we do on the monthly time frame is market structure. We need to identify the market structure. So just taking a look here then, we're most interested in the most recent market structure here on the monthly time frame, which overall has been quite choppy. You can see here price created this higher high, came to the downside, created this higher low. Price came back to the upside, however failed to break above the previous high, which technically created a double top, which we'll come on to as we get onto the consolidation patterns of the monthly time frame. However, as you can see, price struggled to create a new higher high, and price has now come to the downside and hasn't yet broken past the low of 0.94525, which means we've not yet seen a lower low created or a higher low if price was to push back to the upside. So at the moment, the market structure within the monthly time frame of USD Swiss franc is pretty much choppy. We've seen the most recent higher high, however, price has struggled to continue and create a new higher high and has technically created a double top, which, as I said, we will run over. So on the monthly time frame there, you can tick that we've analysed the market structure, and you can just put next to it that it is moving choppy and indecisive at the moment, as price hasn't shown any real market structure since the higher high back here in late 2015. Okay, so next we're looking at is the previous month's candle close. So as you can see here, we are at we've had about 7 trading days since the start of the month. So just taking a look here, we're taking into account the previous candle here, as the month of July is not able to be taken into account. And just taking a look there, you can see the previous month's candle closed bearish with selling pressure on top. So we can just make note and tick that the previous month's candle was bearish, and there was also some selling pressure. Okay, so that is the first two checklists done there. We've identified the market structure and also the previous month's candle close. Now what we're going to do is we're going to zoom all the way out of the chart, and we're going to mark our support and resistance levels by using the line chart and our horizontal line tool. and we're on the color blue, which is for the monthly time frame, and we're simply going to work our way down here using the line chart to mark our key significant areas of rejection. Now we will check these on the candlestick chart afterwards, which you will see. Sometimes it's easier just to flick backwards and forwards, just like doing so, just to make sure we've got all the key areas of rejection as we're just continuing through the currency pair. So as we continue on through, and just go back, and yes, you can see this wick here spikes this area of support, or if we go back to the line chart, it doesn't. So that's sometimes why you want to flick backwards and forwards, as you don't want to mark too many areas of support and resistance rejections. Just flick back quickly. Yep, again, you can see just here, this area here on the candlestick chart is an area of rejection. Going back to the line chart, it's not quite a rejection. So it is key just to flick backwards and forwards as you are marking your significant areas of rejection points. Just move that slightly lower there. Okay, and as we now continue through and mark the areas, just flick back quickly. Okay, yep. Whoops. And just continue on through. Okay. So just going to take a second just to make sure any levels that we feel that we may have missed can also be seen on the weekly time frame, maybe easier on the weekly time frame. However, we'll just take an overview here just to make sure we run through every level, just making sure that we're happy where each level is marked. Sometimes you have to move them slightly when you go from the candlestick to the line chart. If it aligns better, then do so. You're looking for the significant areas of rejection. So if it does align better, then do move the area. However, at the moment, the only thing I'm going to do is move this top resistance level just slightly higher there to the wicks at the top. Okay, and I am happy with them areas of support and resistance. So we can just tick on the checklist that we've marked our monthly key levels and in blue. So any key trend lines? Okay, well, it may be easier to mark this trend line on the weekly time frame. However, let's just take a look. Using this low point down here onto the next low, and that is okay to be marked on monthly time frame there. It may be easier to see it on the weekly time frame. However, that is fine. So we can tick yes, we've marked a monthly ascending trend line. Next, we're looking at any monthly consolidation patterns. Okay, well, as I mentioned when we was doing the market structure, we do actually have this double top here at the 1.03 area, which you can see through here. And I'm just going to highlight this with a small box, which you can see just there. And I'm just going to center back just to make it okay. So you can see that we've had a double rejection from the area of 1.03. And from here, the next area that we'd be looking at as the neckline would be, one second, just grab the horizontal ray tool. So you can see through there the 0.94433 area, that would be the neckline area there. If we was to see price break that neckline, then we would be looking for the double top to play out. That would then need to see the ascending trend line broken to the downside for us to be able to see that also play out to the downside, as we do have the ascending trend line as the next barrier. Okay, so what we would do if we was able to trade this double top when it does break out, we'd measure the height from the neckline to the double top area, and then you can simply just select clone and it will copy that, the exact height. And then if we also just clone this line and we bring it down to there, you can now see that this area would be our target just there at the 0.85845 support area, which would be a support, as that would be our double top that we'd be looking to play out. So that is the monthly consolidation patterns. We can tick yes, and we can also mark that we've seen a potential double top. However, we need to see the neckline broken for that to play out. Next, we're looking at any potential monthly ABCD Fibonacci movements. Well, at the moment, you can tell from the market structure that we are not seeing any bearish Fibonacci's that we could place on the monthly time frame. So that would be a no. Next, we're going to open up all three EMAs here, and just taking a look, we need to mark down that price isn't currently rejecting our EMAs. However, price is below our EMAs. You can see that the previous month here did have a spike of the 50 EMA to the downside. However, currently we're not seeing price showing a rejection. That was the previous month there. Next, we're looking at to see whether the EMAs are bullish or bearish. Well, you can see here that the 20 EMA is currently above the 50 EMA, which does mean on the monthly time frame that our EMAs are bullish. Next thing we want to open up is our Ichimoku cloud then, and just taking a look here, you can see that price is above the cloud, and the cloud is also bullish. Okay, so just taking a run over then of the monthly checklist that we've just gone over. The monthly structure is currently choppy. The previous month's candle closed bearish. We've got the weekly ascending trend line. We've got the double top. We haven't got any Fibonacci. Our EMAs are bullish, however, price is below the EMAs. Price is above the Ichimoku cloud, and the cloud is bullish. So you can see there that we've got a mixed bias. However, if price does play out the double top, then we will be seeing this market run bearish. However, at the moment, there's many confluences for bullish and bearish here on the monthly time frame. So we are going to mark this down as being a mixed monthly bias. So that is our USD Swiss franc monthly time frame analysis. If you do have any questions, please do ask in the webinar jam chat, and I can answer those for you before we move on. The only thing I'm going to do is remove these arrows, as when we go down the time frames, it might be quite hard for you guys to see them. And also, I'm just going to change these to a purple color as I'm doing so. Okay, so I'll just take a second or so, guys, to see if you guys have any questions there regarding what we just went over on USD Swiss franc, and then I can answer those for you before we move on to the weekly time frame. Okay, so Luke's asked, are the EMAs we use the 20, 50 and 200? Yes, Luke, they are the EMAs we use, and you should be able to see them within our EMAs and Ichimoku Cloud lesson. You should come across them when you get to that lesson, and you'll see we give many examples of both. We use them as bullish and bearish, and also for rejection points. So I hope that's answered your question. Just take a minute or so to wait and see whether there's any other questions that you guys have there regarding the monthly time frame. And Luke, whether you could just give us the heads up that answered your question as well, and then we can move on to the weekly time frame. Okay, no problem, Luke. That is fine. Always ask any questions that you have. We're now going to move on swiftly to the weekly time frame. So if we go down to the weekly time frame now, and you can see there we have our neckline and added height still there. And we're now just going to take a look at the market structure here on the weekly time frame. So you can see here price was ranging back here within late 2016, where price then pushed to the upside, and on the weekly time frame this was a higher high, breaking out of this ranging area. Price then came to the downside, created this higher low, pushed to the upside. However, price failed to continue further bullish and created a lower high. Price then came to the downside, broke past this higher low, creating a lower low, pullback for a lower high, and then we've seen this continuation to the downside for a lower low, small pullback, showing a retest of the support to resistance at 0.97765, where price has then continued to the downside, which we're now seeing that movement of. So we can make note here on the weekly time frame that the market structure that we've identified most recently is lower highs and lower lows. Okay, so taking a look at the previous week's candle close, here we can see the previous week's candle has closed as a bullish candle. However, it is showing selling pressure on the top. As it is the weekend, we are taking into account this most recent candle. The market is not open at the moment, and that's a great time to be doing your analysis. So you can see there that the previous week's candle was a bullish bodied candle. However, we are seeing a wick on the top which shows selling pressure to the downside. This may just be a daily retracement on the daily time frame. However, we'll see that when we get there. Okay, so weekly key levels in red. Okay, so to do so, again, we zoom all the way out of the chart, just like we did on the monthly levels, and then we go to the line chart. Just zoom in one more. Okay, and then we go to the line chart, grab our horizontal line tool and change it to red. And then we simply just go through marking the key significant points of weekly rejection here that we can see. Okay, so as we continue through the chart, nice area of rejection through there. Just take it back to the candlestick chart, just double check. That level there actually is not touching. Okay, so back to the line chart. With your support and resistance, it's key to take your time. Don't rush. As you can see here, we're taking our time. There's no need to rush about it. The support and resistance are very key areas, so you want to take your time. Remember, they're a zone. So you're looking for the zone of rejections from the areas of support and resistance. Never rush. As you can see here, we've been analysing charts for years and we're still not rushing. We're still taking our time, making sure that we get our key significant areas of support and resistance marked on the chart. Okay, so just that's perfect there. Okay, so again, just like we did on the monthly time frame, we'll just take a quick overview, just scour down through the areas that we've marked, just making sure that we are happy with our significant areas of rejection on the chart. Okay, so I'm happy with that, and we can then tick that we've marked our key significant areas of support and resistance on the weekly time frame. Just slightly here, just got to bring that level slightly up there. Okay, so that is our weekly key levels drawn. And next it asks any key trend lines. Well, as you can see here, we placed that on the monthly time frame. So that has been placed. So we can mark no for any key trend lines there on the weekly time frame. And next we're taking a look at any weekly consolidation patterns or potential patterns to form. Well, we've already gone over this on the monthly time frame. It's more of a monthly double top. As you can see here, we do have smaller areas of market structure, so we will mark that as a no for a weekly consolidation pattern, as it is a monthly consolidation pattern. Okay, so just taking a move on then, any potential ABCDs on the weekly time frame. Well, let's take a zoom in. I'm pretty sure it's going to be easier to mark this on the daily time frame here. As you can see, the most recent move was quite small, so we will mark that on the daily time frame. So you can mark just a no there on the weekly time frame. Some things like these is easier to pick up as you go through using your experience. However, if you keep doing and doing and doing, you will get there. So next we're looking at our EMAs here, and we're just going to open up the 20, 50 and 200 EMAs, where you can see most recently the 20 EMA has crossed over with the 50 EMA to the downside, and price has crossed below all three EMAs. So we can make note there that price isn't currently rejecting our EMAs. We have seen a previous rejection there from the 200 EMA, however it's not current from this week's candlestick. So we can make a note of no for rejecting our EMAs, however our EMAs are bearish with the 20 EMA below the 50, and we can also make note that price is below the EMAs within the weekly notes section at the bottom. Okay, so that is our EMAs taken note of, and now we're just going to open up our Ichimoku cloud. Taking a look here, you can see that most recent the cloud has crossed over bearish, just looking there on the right hand side. So you can make a note again within the weekly notes that the cloud has also crossed over bearish, and you can tick that price is also below the cloud, which is a bearish confluence there. So keeping it really simple, really clean, you can see there that the market structure should lower highs and lower lows. Previous week's candle did close bullish, however we are seeing selling pressure. We've got our key levels marked. No trend line, no consolidation pattern, no Fibonacci. Price isn't currently rejecting our EMAs, however it's below our EMAs, and our EMAs are bearish. Price is below the Ichimoku cloud, and the cloud is bearish. So building up the confluences there, there's a lot more confluences on the bearish side, so our overall weekly time frame bias is bearish. Okay, so that is very simple, just running over USD Swiss franc of the weekly time frame there. If you've got any questions, guys, please do ask so now before we move on down the time frames to the daily time frame. Okay, great. So it looks like all of you understand there the weekly time frame of USD Swiss franc. Okay, so we're just now going to take this down a time frame. Oops, sorry, wrong side. Down a time frame to the daily time frame now, where we're going to just take a look at, first of all, the market structure. So taking a look here, you can see that we are seeing lower highs and lower lows. You can see from this point of double top from the monthly time frame, price comes to the downside. We saw small lower highs and lower lows to the downside. Then we saw small higher highs and higher highs to the upside. These are the weekly retracements that we're seeing here. Price then came up to the upside, and as you can see here, we saw a daily double top form where prices then come to the downside, showing a break, retest, continuation. Price then pulled back to create this lower high, and we've then seen price continue to the downside, creating this lower low recently, where price has since pulled back to the upside and is showing a potential new lower high point there from that shooting star. However, Friday's candle did push bullish. However, if I just zoom in, you can see that it hasn't quite engulfed the body of the previous candle, which doesn't signal a bullish engulfing, which means price could very well run over to the downside. Price also didn't break the daily high of Thursday's candle there. You can see on Thursday, on Friday, price did not breach the high of Thursday's candle. Okay, so as you can see, the market structure that we've just run over on the daily time frame there is bearish, so we can make note of lower highs and lower lows. Is the market currently retracing? Well, as we just run over, the market has just retraced, and we've seen a shooting star with the potential of downside movement from here. Daily key levels. Okay, so with the daily key levels, what we do is we just zoom out and we take a view of the current area of price. So we just grab this area here, change this to black, and we just have a run through of where price is currently at, just to highlight our daily key areas. You can do this on the line chart or the candlestick chart. As you can see, you can just go backwards and forwards on the daily time frame, just to make sure that you're happy with your key areas of significant support. So you can see many rejections through there, acting as support back here, then resistance, continuing along, a load of support rejections, which you can see is close to current price. And just continuing through then, we've got that significant rejection there. Just looking left again, you can see that was previous support. Okay, can come a bit further to the downside, just in case price does run bearish, and we're just looking at level through there. Okay, so that is our key areas of support and resistance marked on the daily time frame. Very simple, keeping it very clean. We can now zoom back in to current price. Okay, so next we are looking at any key trend lines. Okay, so yes, we've got a descending trend line that we can mark on this chart, which you can see runs just like so. And just taking a look then, let's take a look, see if this works. Could we have an inner trend line here? We can see there, it's a very tight inner trend line there. However, price is holding just below that inner trend line. Price was to breach this trend line to the upside, then it could show that price hasn't finished with that lower high at the moment, and the lower high is going to be deeper. So we can make note that yes, we have marked our descending trend lines on the chart. Any counter trend lines? Well, not really. As you can see, it's only a small few day retracement. If we was looking at a retracement back here, then we could, of course, place a counter trend line where you can see that we could say this was a potential retest there. However, currently the new lower high here is not showing any signs of being able to place a counter trend line as of yet. So that is a no for a daily counter trend line. Any daily consolidation patterns? Well, the market's currently flowing within a downwards direction. So we've seen lower highs and lower lows. The market's not currently ranging. We're not currently seeing any consolidation patterns. As I always say, within our PDFs download folder, we've got downloads of our consolidation patterns that you're able to download and go over, and also have in front of you when you're doing your analysis to always refer back to remind you as you go through the charts. Okay, so next we're looking at a potential ABCD. Well, I did say on the weekly time frame it'd probably be easier to mark this on the daily, and as you can see just here, using that area of lower high down to the lower low point just there, you can see that we've got a 61.8 spike there with that shooting star. If price is to continue bearish to the downside, then we will be using that 61.8 Fibonacci retracement point. So we've got point A, point B, potential point C if price continues rolling over to the downside, and then we'd have the 0% as our target 1, minus 27.2 as the target 2, D1, and then we've got the minus 61.8 target 3, D2. Okay, so you can make note there on the daily time frame that yes, we do have a Fibonacci, and it's currently showing a 61.8 retracement. So next we want to open our 20, 50 and 200 EMAs, where you can see all three EMAs are bearish, so you can tick bearish, and also you can see there that price has previously last week just here shown a rejection. Just going to send that to back. Has shown a rejection there from our 20 EMA, pushing price to the downside, and hopefully if price rolls over to the downside from Friday's candle there, and this rejection will hold. Okay, so you can make note that yes, there was a rejection previous on the 20 EMA. So just moving on then, we've made note that our EMAs are bearish. just closed those EMAs up, and we're going to move on to the Ichimoku cloud, which you can see price is firmly below. So you can tick below, and we can also make note that the cloud is bearish. Okay, so very simple there. That is USD Swiss franc. Last week we was actually looking at taking a short position from this confluence of this shooting star here, showing a rejection to the downside. However, the only problem with it is the risk to reward wasn't there before the next support, which you can see there at 0.95400. We also had the NFP data release on Friday, which, as you can see, did give price push back to the upside. So it is quite handy actually that we didn't actually take that trade last week. Sticking to the plan. If there's news around, then we don't take the trade. That is part of the plan, and that is what we stick to. So just taking a look then, we are looking for this market to continue further bearish to the downside. As we can see, this market showing lower highs and lower lows. If we do see that 0.94433 neckline broken down here in the purple, then we will be looking for price to break the ascending trend line and see price go a lot lower with that monthly double top potential to play out. So on the monthly time frame, we did have a mixed bias as we had the choppy market structure. And there was bullish and bearish confluences, which give us that mixed bias. However, on the weekly time frame, we saw some lower highs and lower lows, and we overall came to the decision of the bearish overall weekly bias and the overall daily bias just going over there with the lower highs and lower lows. Market is currently retracing. We've got a descending trend line too, in fact. We've got a bearish Fibonacci. Our EMAs are bearish. Price is rejecting the 20 EMA. Price is below the Ichimoku cloud. The cloud is also bearish. The market's not currently ranging. Overall there, we are bearish on the daily time frame. So overall on the USD Swiss franc, we are bearish, and we are looking for the double top to potentially play out in the long run. Okay, so that is it. Very simple, very clean USD Swiss franc analysis there. If you guys have any questions, please do ask me in the webinar jam chat, and I can answer those for you before we move on to the next currency pair now, moving on to Euro Canadian dollar. Hi Des, welcome to the webinar this evening. So you're asking which this trade, how to determine an entry point. Okay, well, we did just run over that. We would be looking for a bearish entry point. Just going back to the chart then, taking a look here. Would you put a sell stop underneath the candlestick of Friday? No, we wouldn't. As you can see, price on Friday had a push to the upside from NFP there, and that is not a signal for a bearish movement. We could have placed a sell stop underneath this shooting star. However, according to our plan, we don't trade around high volatile news. So that is why we stayed away from this trade. You will actually see that we did post this within our news feed that our students and VIP members can both see. So we was unable to actually take a short position from this lower high point. However, no, we would definitely not place a short order below Friday's candle. If we was looking for an entry on this pair, then we'd be looking for a break retest of this 0.95400 support area down here, unless price pushes back to the upside, showing a deeper retracement, allowing the risk to reward to be intact. Just taking a look at a short risk to reward from this candle here. Just using that area there, you can see there that the risk to reward there is a 1 to 1.36. We don't like to take anything less than a 1 to 2 risk to reward, which is why we remain patient. So if we do see a further break retest of the 0.5400 support, turn resistance with a nice small bearish rejection, then we could allow us to take a position. Other than that, we could see the monthly ABCD play out, and a break retest on the daily time frame of the neckline could lead to shorting opportunities. It's a patience game at the moment within this market. There's not an exact entry point right at this moment. However, there could potentially be. We just have to hang fire and wait and see what this market produces over the next week. So I do hope that that has answered your question, Des. We definitely would not be placing a sell order underneath Friday's candle. No problem. Any other questions, guys, before we move on to Euro Canadian dollar, which is the next and last pair of this evening? We always go over two pairs within our student webinar, and the next pair we've actually chose it specifically as we've had many emails through of how to actually break down Euro CAD, as it's quite a mixed and choppy pair. So we wanted to go over with you guys just to show you how to actually break it down. If it's mixed and choppy, it's mixed and choppy. Don't force a market. Wait for the market to show the opportunity. Okay, so let's move on. I hope that none of you have any other further questions there of USD Swiss franc. If you do, I can always come back to them at the end. So moving on to Euro Canadian dollar, and we will now go to the monthly time frame. Okay, so here on the monthly time frame, let's have a look at the market structure. So you can see here we're seeing long leg push to the upside here, where price broke above this previous high, creating a higher high. Price came to the downside, created this higher low. Push to the upside, technically slight double top there. Price then came to the downside, created this higher low point. Push to the upside for a higher high. Price then came to the downside. Technically, that's a higher low. Then price failed to create a new higher high, come to the downside, broke past the previous higher low, creating a lower low, where price has now pushed back to the upside and is looking to create a lower high. So that is the current situation within this pair. You can see that price is within the state of changing from bullish to bearish structure, as we've now seen price create this lower low past the previous higher low, and price has then pushed back to the upside. And you can see technically it's a slight double top. We will be able to see this a bit clearer on the weekly time frame if it is a double top, and we will comment on that. So you can make note that we've most recently seen a lower low. However, price hasn't actually created a lower high yet. However, the previous month has closed as a bearish candle, which, let me zoom in because this is a bearish engulfing. And as you can see, the bearish body of the week previous has closed as a bearish engulfing candle, showing a rejection to the downside. This week's small candle here, as you can see, is a small bearish candle, which has shown continuation to the downside. So you can make note there of both of those, that we've analyzed the market structure, showing lower highs and lower lows most recently, which is a change in trend to the previous higher highs and higher lows. And we had previously seen a bearish engulfing, and last week's candle did show continuation to the downside. Small movement, however, it has shown the continuation. Okay, so now what we've got to do is mark our monthly key levels. So to do so, as always, we zoom out, go to the line chart, horizontal line tool, change it to blue. Let's just zoom in. Just take that off. Okay, so starting at the very peak as always, and we work our way to the downside, marking all key significant areas of rejection, taking our time as always. You'll notice that I always say the same things, and that is because of it is important. It is very important to always take your time. And it's simple, it's just repetition, doing it over and over again. Practice, practice. Okay, flick back, make sure that I'm happy with the level. Yep. Okay, perfect. Just continuing through. Okay. Just go back slightly higher there. Perfect. Slight adjustments. As I said on the USD Swiss franc, you want to make sure that you're getting them key significant areas. If you have to move it slightly so it aligns better, that's what you have to do. So just taking a look through there, lovely support area, and just continue through to the bottom. One last area of support down there. Just go back to the candlestick chart, just bring this down slightly, just to there. And this one at the top, just bring it slightly up to the top of that wick there. Okay, and then as always, just run through just to make sure that I'm happy with each level of rejection there. Okay. Yep, I'm happy with that through there. Okay, so now I can make note and tick that I've marked my monthly key levels and they're drawn in blue. So next we're looking at any trend lines. Okay, so let's take a look at an ascending trend line from this bottom onto the next touch there. And okay, so we've got an ascending trend line. Just taking a look, there's no real descending trend lines that can be marked on this chart. So we can tick that as a yes. We've marked a trend line and it's an ascending trend line from the bottom onto the next touch. Okay, so taking a look next, then we're looking at any potential consolidation patterns. Okay, this is very rough and hard to see. However, I'm just going to bring this trend line up and I'm also going to highlight this resistance just through here. Because as you can see, price is capped by this resistance several times. Price has been capped by this resistance several times, and price is trapped in between this ascending trend line and the resistance. So this is what we call an ascending triangle, which can break either way, to the upside or to the downside. However, it's very key to note that price on the monthly time frame is currently within an ascending triangle. As it is clear within our consolidation patterns, you can trade an ascending triangle bullish or bearish. However, we need to await price to show the break before we can trade the pattern. So looking next, potential monthly ABCD. Well, as I went over, price has pretty much nearly shown a double top here. So we aren't really looking to place a Fibonacci as we can't. So that's a no there for a potential monthly ABCD. Next, we're going to open up our EMAs, the 20, 50 and 200. Just taking a look through there, you can see that the 20 EMA is above the 50. Not much length there on the 200 EMA, as the EMAs are calculated on the previous amount of candles, and on the monthly time frame there's not always that many amount of candles for the EMA to be calculated. So we can see there that currently our EMAs on the monthly time frame, the 20 and 50, are bullish. Price isn't currently rejecting the EMA, however price is currently sitting at the 200 EMA there. And then we're going to take a quick look at the Ichimoku cloud, and you can see there that the cloud is bullish and price is above the cloud. So you can make note that price is above the cloud by ticking above, and you can also make note in the monthly notes that the cloud is bullish. Okay, so just taking a look through there, you can see that the monthly structure is slightly mixed with the potential trend change there, showing the most recent lower low. Price is back up at the 1.51800 resistance there, which has shown that bearish engulfing rejection to the downside. We've got the ascending trend line there. We've got the potential of the ascending triangle, which needs a breakout to show the play. No Fibonacci. No rejection from EMAs. The EMAs are bullish. Price is above the Ichimoku cloud, and the cloud is also bullish. So from that list there, we have got a mixed bias. As you can see, price is currently trapped within that ascending triangle, and we have a mixed monthly bias there. As we're seeing price showing bearish movement, however, a lot of confidence is to the upside. However, price is then also trapped within that ascending triangle, which gives us that mixed biased view. Price was to show a breakout of the ascending triangle to the downside, then we would see price break out of the Ichimoku cloud further to the low, and that would also mean price was creating a new lower low past this previous lower low. As you can see, I'm circling here with the mouse. On the other hand, if price was to show a break and a close above the 1.51800 ascending triangle resistance there, highlighted in blue, then we could very well see price back up at the 1.61 around resistance level. You can see that price recently, all these spikes above this resistance hasn't actually led to a monthly candle close above that resistance. Price has come back to the downside and closed at or below the 1.51800 support area. Okay, so that is EuroCAD. Any questions, guys? Please do ask those, and I can answer those before I move on to the weekly time frame. As I just said, we've got a mixed bias there on the monthly time frame. Okay, guys, it seems all of you are happy there with the monthly time frame. We're now going to move on to the weekly time frame. Just going to close up the Ichimoku cloud and the EMAs there as we now move on to the weekly time frame. Okay, so on the weekly time frame, we're taking a look at the market structure, and immediately you should be able to see that it's unclear, and that is how the market structure currently is within this pair. It's an unclear market. It's currently showing unclear structure. You can see from this high point up here, price came to the downside, showed a higher low, back to the upside for a lower high, downside, lower low, back for a lower high. Then the market absolutely just ranged sideways for quite some time before the market then broke out to the downside and ranged sideways again. Price then pushed to the upside, came back to the downside for this higher low from this higher high. Then price has pushed all the way to the upside, created this higher high point at the 1.51800 resistance, where price is now pushing to the downside, and we've most recently seen price break below that 1.477 support area. So on the weekly time frame there, the market structure that we've identified, as you can see, is very choppy. So we're simply just going to write choppy, as that is what we're seeing. Always trade and note down what you're seeing. Never try and make out something that you're not seeing. If you see choppy market, then that is what you see, and that's what you take note of. Okay, so now let's take a look at the previous week's candle close. Previous week's candle here, let me just zoom in for you guys. The previous week is the most recent candle here, as this has closed. And you can see here that this weekly candle has closed as a bearish candle, slight wick on the top and bottom. However, it is bearish. The previous week to that closed as a shooting star with high selling pressure, which this week of previous has continued with the bearish movement rolling over to the downside. So you can tick bearish there for the previous week's candle close. Now we're going to take a look at any weekly levels, and to do so we do exactly the same as we did on USD Swiss franc. Zoom all the way out, even more so. Okay, and we go to the line chart, open up our horizontal line tool, grab our, and we just got to remember here that this top area here, that's not a level. As you can see, going back to the candlesticks, the candle does spike that resistance. So we're just going to make our way through, marking our significant areas. Changing back to the candlestick chart just to make sure that I'm happy with the rejection areas as we go. Okay, just continuing through. Nice area of support and resistance through there. And again. Okay. Okay, and one more level, which is for this spike there. And back to the candlestick chart. And as we did on the monthly time frame, we just take a quick overview, scanning through each line, just to make sure that I'm happy with each level. Sometimes you have to slightly adjust the level just so it makes a nice touch. Okay. Okay, so I'm happy with them key levels there, and we can now tick that the weekly time frame levels have been marked. So after ticking yes to the weekly key levels drawn in red, we're now looking for any key trend lines. Well, we've marked this on the monthly time frame, so there is no further ascending trend lines to mark. As you can see, that's already been placed. So that's a no. Any weekly consolidation patterns? Well, we did mention the potential of this double top here. If we was to see this double top play out, it was just slightly, ever so slightly lower than that wick there. However, if we was to see this double top play out, let's grab the ray, horizontal ray. This here would be the neckline. Let's change the color so you guys can see it clearer. Let's do an orange. So you can see there that orange line through there would be the neckline, and we would need the double-ended arrow to measure the height. Whoops. Clone. What's happened there? Okay, so now that's cloned. We grab hold of that, add that onto, rather annoying, this mouse on a desktop Mac. For some reason it loves to move on its own. Okay, so just through there, just going to bring it to the line there. So if we was to see the double top play out, which is 0.1, 0.2, then we would need to see a break retest of this neckline at the 1.38 area. And as you can see, that's a long way for price to go there for us to be looking to trade that pattern. We'd need to see price come all the way down, breaking through all these areas of barriers of support and resistance, and also break this ascending trend line for that double top to play out. So that is a potential, and we are making note of that on the weekly time frame, that there's potential of the double top to play out. However, I am just going to remove it just to make the chart a bit cleaner, as we have made note of it. However, it's not something that could potentially play out imminently, so we are going to keep that as a note for the moment, that there is the potential of a double top. Next, we're taking a look at a potential weekly ABCD. Well, as we went over in USD Swiss franc from the previous double top that we see there, it's not really easy to place a Fibonacci point from a double top point. So there is no actual Fibonacci to be placed within the weekly time frame here. So that is a no. And then next is to look at our EM8, keeping it very simple open up our EMAs here. You can see that all three EMAs are bullish. Price is also above the EMAs, and price is currently sitting at the 20 EMA there. So you can see price is sitting at the 20 EMA, however, it isn't showing a rejection. We could in fact see price break the 20 EMA, then show a weekly rejection from the 50 EMA and show a higher low. That could also occur at the 200 EMA, however that is patience to see so. So make note that price isn't currently rejecting our EMAs, that's a no. Price and our EMAs are currently bullish, and price is currently sitting at the 20 EMA. Last but not least, on the weekly time frame is the Ichimoku cloud, which you can see the cloud is bullish, however price is inside the cloud. So it's very mixed here on the weekly time frame. We've got a choppy market structure, bearish weekly candle, no trend lines. We've got the double top, which is a bearish pattern, no Fibonacci. Our EMAs are bullish. Price is currently above and at the 20 EMA. Our Ichimoku cloud is currently bullish, however price is inside the Ichimoku cloud. Overall, from that list there, it's again a mixed bias. Nothing is very clear. We're not seeing clear market structure signaling the move. We've got the monthly ascending triangle. Price here is showing a potential double top, which is bearish. We need to see some overall movement here and some confluences that are standing out within one direction or the other, not mixed. As you can see here on the monthly time frame, we had mixed, and on the weekly time frame, we had mixed. Unfortunately, sometimes when a pair is like this, it is what you're seeing and it is what you need to note down. However, it is just the market being mixed. So that is what you need to take note of. No point forcing a trade within a market that's not showing a trade. Just make note of what you are seeing. So we are seeing a mixed market here on the weekly and monthly time frame of Euro CAD. So if you've got any questions, guys, before we move on to the daily time frame of Euro CAD, please do ask. Emmanuel has asked, do I think the G20 meetings would gap out these pairs once the market opens? Again, that's a speculation on news. We don't like to speculate on news. I could say yes, I could say no. What I prefer to do is wait for it to happen. Wait and see whether it actually does make the market gap or whether it doesn't make the market gap. I couldn't tell you how many pips it's going to gap, whether it's going to gap to the upside, whether it's going to gap to the downside. It's just something that you've got to wait and let play out. News is something that is unpredictable. It's 50-50. It's why we never trade the news. It's why we stay away from high volatile news. So unfortunately, Emmanuel, it's an answer that you probably didn't want to hear. However, honestly don't know. And if I don't know, I'm only going to say I don't know. Okay. Any other questions, guys, there regarding Euro CAD? I will answer those for you if possible. Okay, guys, let's move on to the daily time frame. It's 9:30 and the markets do open within an half hour. So I do want to complete this before the markets open to let you guys get ready for the week ahead. So now let's take a look at the market structure here on the daily time frame. We can see here price came up to this resistance here after showing higher highs and higher lows. Price then pushed all the way to the downside, breaking past this previous higher low, creating a daily lower low. Price then pushed back to the upside, back to the previous support to resistance at the 1.5 area, where price then went to the downside. Price has since pushed back to the upside, where on Friday printed a bearish engulfing candlestick. So that there is looking like we could now see price roll over to the downside, and it could be a potential shorting opportunity. So the market structure there is lower highs and lower lows. Is the market currently retracing? No, the market has retraced and is currently showing a bearish engulfing candle. Any key trend lines? Well, we could place a descending trend line here on the daily time frame. Just taking a look from this point. Whoops, looks like I did not select it. Okay, so just through there, you can see we've got a small descending trend line, which price has respected twice and did come close to last week. So we can mark, yes, we've marked a descending trend line. Any counter trend lines? Well, not really on the current retracement. However, the previous retracement, you could have had this very small counter trend line there, which you can see price broke, pulled back, could be acting as a retest here, where we've now seen the bearish engulfing. A break of Friday's low would show continuation to the downside, which would show further bearish movement. So you can mark that as a yes. However, it's not currently retracing. It's a previous counter trend line that we just marked on the chart there. Next, we're looking at a potential daily Fibonacci. Well, from this Fibonacci, we're looking from point A up here to B, point here, B, up to the 50% C. Price then came to the downside, broke this counter trend line back up for the retest. We're looking at the continuation to the downside. Okay, so as you can see there, we did have a look, and this, well, I didn't have a look on the webinar, however, previously taken a look. All our daily levels are actually marked from our weekly and monthly support and resistance, which you should be able to see there. I should have mentioned that at the start, so I do apologize, guys. However, as you can see, our areas of support and resistance are covered by the monthly and the weekly. This occurs if you can't see any other areas of support and resistance, and then that is that. So you just have to go with what you see, and that's what we see. So there is no areas of support and resistance on the daily time frame to be placed. So we've got our 50% Fibonacci retracement. Next, we're looking at rejecting EMAs. Okay, so 2050, 200. We can see there that our price has crossed onto the bearish side of our EMAs, and last week's bearish engulfing has rejected off of our EMAs there. You can see our 20 EMAs just about to cross over to the 50 EMA to the downside. So our EMAs are currently touching. So you don't have to put bullish or bearish. You can just simply write next to it, they're currently touching with the potential to cross over bearish. Price is still currently above our 200 EMA. However, it wouldn't take much for price to push back to the downside. As you can see, it does align there with the minus 27.2 extension, which could push price back to the upside. However, we are looking for price from here to continue further bearish. So price is currently rejecting our EMAs bearish. Our EMAs are currently touching, and price is currently below the 20 and 50 EMA. Just closing up our EMAs then and opening up our Ichimoku cloud, we can currently see, just looking left here, the cloud has crossed bearish and price is currently within the cloud. If price does break the low of Friday, it would lead price to break out of the cloud to the downside, looking for further downside movement. Just taking a look then, overall on the market structure, we've got lower highs and lower lows. The market's not currently retracing. We've got a descending trend line. We've got a small counter trend line from previous, no consolidation patterns. We've got a bearish Fibonacci. Our EMAs are being rejected to the downside. They're currently near enough crossing to the downside. They're currently touching. Price is inside the cloud. And if we did see price break out of the daily low of Friday, this would lead price onto the bearish side of the cloud. And the cloud has also crossed bearish. So from that, you can see there that there's not many at all, if any, bullish confluences there, which is why we have the outline of a bearish daily bias, which is why we wanted to go over this pair, because you can see the previous monthly and weekly time frame are showing mixed signals. However, the daily time frame is very clear with just straight bearish confluences. So overall in the daily time frame there, we are bearish, and we're looking for price to break the daily low of Friday's candle to show further continuation to the downside. Overall, we'd be looking for price to reach the monthly support area of 1.42400. That would be the area of key support that we would be looking at further downside movement from. Okay, so I hope that is very clear and simple. Dayan did mention that I've forgotten the daily key levels. I did go over that, as I did see that you mentioned that I'd forgotten the daily key levels, and I do apologise for that. However, you can see that they are marked and covered from the weekly and monthly levels. Thanks for that, Dayan. Just going to now run over for you guys that joined us late, just quickly go over the daily updates that I did give at the start. If you do have any questions there regarding EuroCAD daily time frame, please do leave those now in the webinar jam chat and I can answer those for you. However, we'd just like to remind you that tomorrow is a quiet day with no news releases. On Tuesday, we have one news announcement for the US dollar. However, Wednesday is a busy day, which includes a speech from the US Fed Chair Yellen, the monetary policy release from Canada, and also the Bank of Canada will release their interest rate decision. And later on the evening of the 12th of July, we also have the Bank of Canada Gov Polos speaking. On Thursday, it's not such a busy day. However, we do have two releases for the US dollar, which also includes another speech from the Fed Chair Yellen. So that's two speeches this week from the Fed Chair Yellen, one on the 12th of July and one on the 13th. On Friday, we have three releases for the US dollar only, which include the core CPI, the core retail sales, and also the standard retail sales release. Okay, guys, so thank you for tuning in, and I hope you guys are prepared for the week ahead. It doesn't seem like there's any further questions there regarding Euro Canadian dollar. We are looking for this pair to continue bearish. That is pretty much it from me this evening. I will hang fire here for a couple minutes or so and just see whether you guys have any questions that you'd like me to answer before we all go and wait for the markets to open and get ready for the week ahead. As I did previously say, it's not easy to predict news. Well, you've got to be a genius to predict it, as it's 50-50. So wait and see whether the markets do gap to the upside or gap to the downside before setting any market entry orders. Okay, so it doesn't seem like we have any questions, guys. So I would just like to wish you all the best for the week ahead. Please feel free to use the student contact email at any point. As any questions, we are here to answer those for you. We are looking forward to the week ahead. Please do check the news notifications. Sorry, a question just has come through. With EuroCAD, would the previous low of the would the low of the previous candle be a good entry point? Well, we use market entry orders, and you could very well set a market entry order below the previous candle there of the bearish engulfing. That is okay for you to do. As I was saying, sorry, before that question just interrupted as it came through. I did put a news notification in the news feed earlier on today stating some potential nice opportunities that could arise. They did include XAU being bearish, XAU USD's gold bearish, looking at the 1250 support. If that's broken, then we're looking at the price to go a lot lower. On US oil, we're looking at the first target of 42.50 being achieved. A break beyond that, and we could see US oil create a new lower low. We're looking for price within USD Japan Yen to continue to the 114.800 resistance area. USD CAD is running bearish at the moment with the target of 1.27500 still intact. Euro Japan Yen price is currently at the 130 resistance area. Will we see price break or reject for a new higher low? We will have to wait and see. Euro GB pounds currently stuck between support and resistance. If we see a break of the 0.88800 resistance area, then we will be looking for a long position. GB pound NZD and GB Pound AUD, we're looking at potential bearish movements within those pairs, and also within GB Pound Japan Yen, we could see a retracement form for a new higher low to be able to take a long position. So there are some notifications and updates for the week ahead. As I said, student contact is always open for all of you. I wish you guys the very best for the week ahead, and thank you for tuning in this evening. I will catch up with you guys soon. Speak to you soon, guys. See you later.